Hello and welcome to week 24. This is Jeffrey Cohen, and I'm here to talk to you about volatility in the markets and service. And this is a Chicago Quantum market and firm update. I'm Jeffrey Cohen. I'm the president of Chicago Quantum, and I'm very excited to be here to speak to you today. So, let's jump in. This is great. So I want to start off, I got my notes there so you can see what I'm talking about. I want to thank everyone for listening. First off, it's really great that you're here. So, crazy week this week. So, the first thing we're going to talk about is this was the whiteboard that had all of the activities that I had to worry about, or all the things I had to worry about. I had buy and sell orders in there. I had all the different solvers we're working on. I had data. I had Turkey. I had asymmetric betas. I had all kinds of stuff. And I just want to tell you that I'm pointing at the board, and I'll tell you that right now there's only 3 missions for the firm. 3. It's not much. 3 notes. Number 1 is bring in a second large client for our stock picking. The second is sell a large project. We have a project now. Be great to have another one. We have a client now. It'd be great to have another one. And then third and finally is we're going to speed up the run to get us valid and consistently useful answers in 3 hours. And, of course, that means working on the reporting and working on the end-to-end process, data validation all the way to report and email. So I'm very excited that you're out there listening, and I already see somebody's playing it back. So this is great. So I just want to talk that we're getting a lot clearer on our views. And we're not getting a lot clearer on our code. And we're looking at maybe some big opportunities in the business. So you might wonder why the picture. You see how calm the family looks, how happy. They don't realize it's quadruple witching hour in the markets, where both futures and options are expiring today at the end of trading for stocks and for indices. And this creates a massive amount of volatility in the markets. And then top it off, see if I got a picture of Mr. Powell. Yeah, here he is. Chairman Powell. No, I'm just kidding. So Chairman Powell did a video, and the market thought this guy was talking from the Twisted Sister video. And is that a pledge pin on your uniform? You remember. But what this guy had to say was pretty important. I've actually got I've got his notes. His notes are very important, right? So what did he say? Policy goals that Congress gave the Federal Reserve is maximum employment and price stability. Today, the FOMC, the Federal Open Market Committee, which is the committee or the organization within the Federal Reserve Bank that sets rates and decides on open market, I shouldn't say open market operations, but operations that affect the monetary policy of the United States, they're going to keep interest rates near zero, and they maintain their asset purchases, which is $120 billion each month. And so, but they did talk about how, we're in a recovery, there is transitory inflation, but we don't think it's a big deal. We don't think it's systematic. Indicators of economic activity have continued to strengthen. We're posting our fastest rate of increase in GDP in decades. But remember, this is because we just came off a pandemic. And so he walked this fine line, Chairman Powell. There were a lot of questions. I actually listened to the thing twice before my brother called me. And we had a good conversation there about it. A lot of people are employed, but there's still a lot of people looking. Okay? There's a great increase in demand, but supply is constrained. And so what does that mean? That means that it's easy if you send everyone $1,200, they're going to spend it. Many of them are spend it. And if you tell people that you'll give them child tax credits all throughout the year, they're excited. They got money in the bank, they want to spend it. On the other hand, and when stocks go up and people have stock market investments, they feel more wealthy. They want to spend it. But the supply in the market, manufacturing, facilities, restaurants, housing, cars, it's hard to make things to keep up with demand as quickly as demand can move. And that's what he was talking about. And so I like this guy because this is how the market seems to have reacted, right? The dollar's strong. And why is the dollar strong today? Because they think interest rates are going up. So they're talking about keeping interest rates near zero, and yet the market is crazy angry and thinks rates are going up. And as a result, we actually had 4 industries, interest rate sensitive industries, that basically declined yesterday. And today, the whole market seems to be taking a haircut. So I'm going to talk a little bit more about that, right? And so when I think about this, and I think about the perfect family, the fantasy. By the way, this is a public picture. We're able to use it without paying royalties. Something to think about. Now, the other thing this family relies on, right? They're not worried about market volatility, but they are worried about people serving their nation to keep them safe. And so one of the things that we did this week is we met with DISA, the Defense Information Systems Agency, to talk about being a small business vendor or contractor to DISA. We went through the second step in the process, and that's great. Wow, is it a great opportunity, a significant opportunity? I am not going to get that, but I am going to see who's calling. Sorry. So, service and DISA. So we met with the 763rd ESS, which is the Enterprise Support Squadron, Air Force, and there's a procurement team. Now we've met with DISA. There is a significant business opportunity, but this would require borrowing, hiring, finding a location, working with a prime contractor to get our top secret clearance, all those things. I had a call yesterday with a contractor, a 30-year veteran of the federal government, 20 years active service, 10 years with the Small Business Administration and other federal agencies, helping small businesses like ours to be successful. So they want our firms like us to be successful. They want us to help. Can you imagine if we could use our quantum algorithms and our solvers that we use today to pick stocks, and tomorrow we use them to solve tough logistics problems for the Air Force? Or for the Army, we talk about, optimal loading. Or maybe for the Navy, we work on communications. Because we have platforms. In fact, it's running right now. I'm actually going to show you that it's running right now. I've actually got code running right now. And this code, which is written in Python, by the way, is solving a hard problem. It's working to answer the question, what stocks should I hold? What stocks, Mr. Cohen, should I buy? And you see right here, we have a simulated bifurcator, which is like a crock pot. Crock of shit, I say. Crock pot. In 1,276 seconds, it picked a 3-stock portfolio with an amazingly powerful answer. We're now running our own custom-written, bespoke simulated annealer. So we're using all these different technologies. Gradient descent. Taboo. Simulated annealer, 2 different kinds. Quantum annealer. Monte Carlo, both fat tail and straight up. We have genetic algorithms, 3 different kinds. We have what I like to call a comprehensive genetic algorithm. We have a fast genetic algorithm, and we have a preceded genetic algorithm. We have all these different ways we can solve this problem of picking stocks. By the way, it works. Knock on wood, we made good money in the stock market. Our clients have made good money in the stock market. but imagine the service aspect of helping your nation. So I'd like to appeal to anyone else out there that's maybe younger than me, has some years of service ahead of them, to think about serving your U.S. Defense Department, think about serving other government agencies, even someone like a Small Business Administration, the Peace Corps, all those folks. State Department, federal as well as state. State of Illinois could use some really good people. And so think about service. Think about selling your products and services to the government so they can get made in America good stuff. So that's why this family's on the screen, because they're happy because others serve their nation to keep them safe. Let's keep going here. We are fully invested in the same 4 stocks. That is not a flattering picture, Chairman Powell. 4 stocks, okay? And I want to talk a little bit about a wild ride that we had. So the model's picking stocks that are coiling, that are consolidating, that have very low risk, very low volatility of stock price. They may have moved, but they moved 1 or 2 days. And if you survive that, now they're pretty stable. And so I'm going to talk about these stocks. I got lots of pictures of these stocks. I just want to show you some good ones here. And I know I got to blow everything up, make it bigger, so you can really get a good look. So we're going to start with Satsuma. I know you guys love to see me, but I'm going to make this a little smaller here. So Satsuma's been flat as a pancake. I mean, not flat as a pancake, but varying between $4 and $7 for almost a year. It dropped because Satsuma is doing primary research. They've got a phase 3 trial, and it failed to meet the milestones. They're looking for migraine headache medicine. And so, have any questions? No. So what do I mean by migraine headaches? First off, I hate the idea of a migraine headache. I'll show you a picture. It may take a little while to find it. God, migraine headaches, they're awful, right? So now imagine that in order to treat a migraine headache, you have to get a shot. Well, look at this. What is that, Jeffrey? Well, you take it's like Flonase, and you right in your nose. And within 2 hours, your migraine's gone. Or at least it's significantly improved. And it prevents the migraine from coming back the next day. Single-use container, throw it away. You may have to shoot it twice to get all the stuff out. And so they're going through a new phase 3. And what happened was they issued a very positive statement this week. So I love it because people are like, well, what does Satsuma do? Well, it makes migraine medicine that works like Flonase. Okay, I get that, Jeffrey. So what did they say? So Satsuma came out. You are not going to be able to read this, are you? This is terrible. All right, let's talk about it. Because I am learning a ton about this business. I love it. Positive pharmacokinetic, tolerability, and safety results from STS 101, which is their primary drug candidate. So all 3 dose strengths of STS 101, including the one that we want them to use, which is 5.2 milligrams, they administered with a improved 2nd generation nasal delivery device. I love it. It's that little plastic thing. And they were well tolerated. Nobody got sick. 75. It was a test of 75 people. Phase 1 trial. So they had to go back because they thought they might have wanted to increase 5.2 to 6.4, 10.4. The problem is if you put that much DHE in your bloodstream, who knows what's going to happen, right? 5.2 is kind of the standard dosage. So it did great. It did great, right? All 3 dose strengths did well. And so as a result, they are going to initiate the Summit Phase 3 efficiency trial with the 5.2 microgram dosage strength of STS 101. All right, Jeff, so what does that really mean? That means in a year, we're going to be seeing a press release from Satsuma that hopefully says Phase 3 came in, it was efficient, it was effective, it was tolerated. We gave it to 1,500 people, and like 1,000 people did better than the placebo. And behind the curtains, we checked the blood work, and there was enough of the medicine in the bloodstream to show that it actually should have worked. Well, that's going to be great. And why do you care about that, Jeffrey? What's the big deal? Satsuma, right? Well, the first thing is they actually are hiring a senior director of clinical studies. So this next Phase 3 efficiency trial, they're going to have a fairly well-paid but highly competent and capable senior director in charge of that trial. So they're going to have better capabilities. They're also going to... where's the thing? Here it is. This is the other thing that they did, which I'm glad they did. Actually, I reached out to investor relations about 4 hours before the press release came out. I was very glad to hear this. With the second generation STS device and improved instructions for use, stick it all the way in your nose. Get it in the back. Press it. Press it twice maybe. Right? It's not hard. And by the way, if you get a migraine, use it. Don't wait 3 hours and then use it. Just use it. You get a migraine, you use it. You have to use it 100% of the time because it's a medical trial, right? Don't just use it when you feel like it. And so they expect subjects in Summit to self-administer the full dose with less variability than before. So I love this, right? Because it's stuff I could understand, right? I know DHE works because there's all those papers. Getting it through the nasal cavity and through the mucal layer, the mucus, right? That's hard. So you have to change the formulation. They did that. They have a patent. They have 10 patents, actually. The one that was approved, I read. You need a good container. They got that. It's a throwaway. Use it once. There's no dirty containers. They're hiring the right people. All feels good to me. So, Jeff, talk to me about the economics. Talk to me about the numbers. Okay? I don't understand why you think this is a good deal, Jeffrey. Why do you think it's a good deal? So we go to Satsuma, and it was trading at $4.83 3 days ago. And then the news came out, and it skyrocketed to $7. Oh, my God, I should have sold it. But I didn't, because I believe in the company. So then it dropped back. It's $5.50, right? It's $5.36 right now. So, but at $4.83, which is where it was when I last updated my spreadsheet, you're buying the whole company for $22 million. So you get a chance for a migraine headache treatment that doesn't require injections or Botox for $22 million. I bet you they're going to sell $22 million worth of migraine medicine in 6 months in Chicago. This thing's going to print money, right? And so I could have sold it at $6.50 or $7. I was right in front of my computer. I could have done it. Didn't do it. I'm holding on because I'm not selling for pennies. So it's a good deal. By the way, there's 2 other stocks just like it, which we're holding. So I'm going to talk a little bit about those. This is very important that you understand how we think about these problems. So in order to prepare for the meeting today, I went over to the Bureau of Labor Statistics, and I needed some data. So I took a look. Do you know they have planned maintenance for 4.5 days for a website? I don't know about you. We maintain our website. It takes about 5 minutes. When I worked for IBM, Hewlett-Packard, even Siemens, we would update clients' websites. And just the idea that you'd be down for 4.5 hours. This is the main page, bls.gov. It's crazy. So, by the way, We no longer do that type of consulting, but call someone next time. 4.5 days of planned downtime for the Bureau of Labor Statistics. It's pretty crazy. So just wanted to point that out. So Satsuma, pretty flat. If you zoom in on Satsuma, though, let's see where I have it. Here it is. Let's bring it in. If you focus in on Satsuma along with the other stocks that we're holding, what happened? Well, what happened was overnight it went up a lot. But it doesn't really matter overnight because typically very few shares trade. And so here's the other stocks. So these are 3 pharma stocks and an automotive stock, automotive information services stock. Let's take out the automotive. It's just not that interesting. So these are your pharma stocks, and you can see they have roughly the same pattern. And so people are either excited about making these bets, this is a 6-month chart, or they're not that excited to make the 6 months bet. And now let's take a look at the last 5 days, because this is where it gets interesting. So in the last 5 days, by the way, AKBA and CRBP, Corbis, not that interesting. So we're going to stay here. 5 days, we're going to not look at the, here we are, colored bars. And zoom on in. So I'm talking to my brother, and wouldn't you know, the market pops overnight. It opens, interesting, it opened at 550. It, look at it for the day. Just keep it simple. It went up a lot. It went over $6. People could have bought and sold it at $6 during the trading day. Today it's a lot lower on lower volume. It's at 540 right now. But the point is, this stock has the ability to leap. So the term for that is kurtosis and leptokurtic behavior. So a leptokurtic stock has the ability to have a big move. So I like that in a stock. I like if a stock can go up $1, go up 20% in an hour, in a day. I don't like when it goes down 20%, but I like that it moves. And with a stock like this at $20 million net cash valuation, it should be moving a lot in the right direction as long as all the medical work that they're doing comes in correctly. And so now it's 86 in our calculation, 86% owned by institutional investors, large individual investors, and insiders of the company, or a company that's controlled and owned by the insider of a company, a director. 86% of the stock. So this thing is tight. This thing is tightly held. Not a lot of floating shares out there. And you can see how it could pop right away. And so I like Satsuma. And I think you should too. By the way, this is not investment advice. This is a very risky stock. Do your due diligence. Do your own research. You can lose all your money. If you buy options, you can lose more than all your own money. You can lose all your money and go into bankruptcy. So please be very careful and do all your own research. So what else we got on the list here? I guess I'd talk a little bit about AKBA. Same kind of story. Flat, flat, flat. AKBA is the kidney guys. They do the kidney research, medicine for kidneys. And they just have a new drug application in to the FDA for their, what's it called, like Vadistat. What it does is it prevents or treats anemia in both dialysis and non-dialysis patients. So what happens is your kidneys start to go and you get anemia, which weakens you and kills you. So in this way, you can take a pill. That's great. I actually have a relative who's on dialysis. And so it'd be really great to say, you know what, uncle, here's a little pill. I need you to take it. You're going to feel so much better. Oh, Jeff, that's terrific. Because the last thing I want is more dialysis or more shots. Corbis. Corbis is the same kind of story, but there's a twist on this story. I'm going to share with you the twist in the spirit of full disclosure because honestly, it's an ugly story. So just looking at Corbis for the minute, though, pretty flat. I mean, it's gone up maybe 250. The thing's a dog. The thing's a dog. The thing's been a dog for as long as I've watched it, right? It had a really nice run in February and March, and it fell right back. So let's talk about what happened, right? So I don't like the story. I'm going to tell you the story because a lot of times you like a stock, you like a company, but you're not sure you believe in the management of that company. You're not sure you believe, right? And so what I would say to you is don't worry about it. There's lots of management teams out there that you might not like, but you can still like the stock. And so you just have to understand what's happening. So here's Corbis. Now Corbis has enough money to last them for a while. They're doing cancer and immunodeficiency stuff. And so they're not only doing their own molecules, but they're actually potentially using other people's molecules to figure out how to cure cancer. Now, that'd be great. Cure cancer, people live longer. I love the story, right? But the truth is, it's hard to do it. You need a lot of cash. You don't have any revenue, you need cash, right? So how are you going to get cash if you're a pharma? Well, let me explain what happened, right? You take a look. They probably had some good results up here. By the way, they have results coming out soon, Corbis, but no one's heard anything. There's no public information. I didn't send a letter to investor relations. I don't know. I don't know why the information isn't out yet, but it just isn't, right? So we have no news moving the data. But take a look at the stock. $3, $3.50. Now you're down into the twos. And then all of a sudden it goes from $1.88 to what's that close right there? $1.39. So Jeff, what happened? Why did it drop 35%? Well, they voted on a dilution measure. 2-for-1 dilution to go from 150 million authorized shares to 300. So what does that mean? At $2, 150 million shares, maybe they raised 300 million, maybe they raised 250 million because the stock goes down, and they're going to use that money to operate. So they need the money to operate. What I don't like is the fact that as a shareholder, we're going to lose half our value, right? That means I got to go out and I got to give them money. I got to buy shares in order to keep my ownership of the company. So the stock went up because actually the dilution measure failed. It didn't fail because people voted against it. It failed because there wasn't a quorum. Well, guess what? Last night it passed. So the stock opened around $2. So it was trading at 213. It was at 220. People were thinking maybe it wouldn't pass. So we're down from 220 to $2. You're down 10% because the dilution measure passed. And that's it. There's no news. It's just your shares are going to be worth half as much of the company, but the company's going to have more cash to be able to operate without costly debt or preferred financing. So I'm good with that. I just know what you're getting into, right? Akebia. Might as well take a look at Akebia. So there's no news on Akebia. Look at that. Since March, it's been about flat. I bet if I do that drawing thing where I draw a regression line, yeah, we're going to try that. I haven't done this, by the way, going from today. So you're pretty flat going all the way back to February. Okay? So Akebia is a wait and see. So Akebia, they got their new drug approval that's got, or new drug application that's gone in. They had a good phase 3 trial, clinical work. It looks like it's going to work. It's great. But there's nothing compelling about this stock. Now, I only wish I would have bought it at 3. And I'm looking at my whiteboard. I bought it at around 356. So I bought it probably right in here, early June period. But it would have been nicer if I could have bought it a month before. But the problem is that the Chicago Quantum Net Score only discovered it in June after all this time being flat, right? It said, look, this is a good stock. This stock can go up. This stock can run. But lately it's been flat, so you're getting very low risk with a good potential for running. And so I'm long Akebia. I think it's great. I think it's just a wait and see. And if you go back long enough, this is 2020. This is September of 2020. You see this, I bet you the regression line is going to go straight. There you go. This thing's flat as a pancake. So it's just a bet on a drug discovery team. I like the bet. I like the risk profile. So let's keep going. This week's market, mixed and down. And the markets are transitioning between industries. And so let me take a look at a few charts with you. So first thing I want to do is I want to show you some of the charts.
15 hours.
I know it's 15 hours. It's 3 p.m. by the way. No, I'm sorry. It's 1 p.m. 2 p.m. Eastern. I'm going to take a look at 4 charts here. So my guess is if I look today, I'm going to see something similar. So let's take a look today, and then let's go back to the charts that I tweeted out. So look at the market today, and first off, it's pretty much all red anyway. But take a look at energy, and you see it's pretty much all red. The only thing that's not red is Brazil's energy company and Cenovus Energy, which I've never heard of. Okay, REITs are down, utilities are down, basic materials are down, except for Vale, I guess, mining company. Healthcare is very down. Look at financials. Look at the diversified banks, the big banks, regional banks, insurance, asset managers, capital managers, insurance, financial data, stock exchanges, mortgage finance. So basically, there's nothing good about. Trupanion is up, but I've never heard of them. Who's up? Some tech is up, and consumer cyclical, and Tesla's up. Great. So just because the market's down isn't that interesting. By the way, I had a question. Somebody came on the system and asked me last time or a couple weeks ago, what do you think about semiconductors, Jeffrey? Well, let me show you semiconductors. Pretty much all red. The problem with semiconductors is it takes a lot of capital. It's a lot of risk. It's a lot like a biotech. Okay? I mean, we know this stuff's probably going to work. You're going to work through it. But it takes a lot of investment and engineering to make this work. Okay? They're just not investing. This is the equipment and materials. These are the companies. I mean, NVIDIA's up. By the way, NVIDIA is really loved by the Chicago Quantum Net Score. So NVIDIA might be up because we chose it, or we chose it because it's a very, very solid technical stock. But take a look at that. Taiwan Semiconductor, TSMC, Intel's down. So MU. Oh my God, I haven't seen them in forever. Micron Technologies. I did project work in the semiconductor industry, and they were one of the competitors. And they make DRAM chips, memory, dynamic memory. So I don't think people believe. I don't think industry believes that it's going to be safe. These large capital investments are going to be safe. Now, I don't know if it's because of government or if it's just because of the economy or maybe COVID's coming back. But this is a bet against capital goods. On the energy side, this is a bet against oil and gas prices. Now they're up. They're over $70. Wow. Oil and gas through the roof. But we all know what happens. We over-drill. We over-invest. Right? And then what? And then what? And then you have to start absorbing an Occidental Petroleum, buying an Anadarko. And it takes a decade to get out from that debt. I mean, even my favorite stock, still my favorite stock, but I don't own it, SMLP, Summit Midstream Limited Partners, they're still dealing with $1.1 billion. Debt overhang, a 5.0 EBITDA ratio, and they got to refinance that stuff. If they don't refinance it, I'm looking at my calendar here, in 12 days, they have 12 days. They don't refinance it, 1.1 billion is going to show up as a current liability. What do you think is going to happen? I love SMLP. Don't do that to me, guys. Just don't do it. All right, let's take a look. I want to show you what I wanted to show you, right? So we looked at the banks earlier this week. Now, it's worse today, but you saw it a few days ago. The diversified banks dropped. Insurance dropped. The regionals dropped. Asset managers, capital markets dropped. P&C insurance, life insurance. So now it's all red. But before it was just this kind of red. This is a tough turnaround. It wasn't like this before. Industrials. The only industrial sector that looked good was consulting, specialty work, and staffing. Everything else is a dog. Everything else, look at the farming. You hate to see that. Caterpillar and John Deere are down. Let me bring the chart back up for right now. I love John Deere. By the way, just it's full disclosure, one of my biggest clients when I was at Siemens was John Deere. Love John Deere. You know the song John Deere Green? It's good stuff. So where's John Deere? Here it is. So they're not that bad right now. They're up less than 0.5%. But wow, you know, you talk about just a market correction there, a bad correction, and you just hope that it's gonna be fine. PACCAR truck engines down 2.4%. General Electric, 3M, Honeywell, Illinois Tool Works, ABB, Emerson Electric, just the industrials are down, right? And so why would the industrials be down? It's because people don't believe that the economy is going to recover. That somehow they heard something from Chairman Powell that made them upset. It made them upset. Chairman Powell made them upset. I'm not happy about that. I wish he would have called in sick and not had the thing, you know? Not had the conference call or chosen his words a little more differently. This is basic materials. Come on. Kidding me? Energy. The only energy stock that was up yesterday was Chinese. And today, that one's down 5%. You know why? Because the market was closed in China when everyone decided to go down and they had to catch up to do, right? Probably the same thing with Royal Dutch Shell. Come on, guys. You're killing the markets right now. I don't know if this is triple witching hour or quadruple witching hour when all the options expire, but this is pretty much a bloodbath out there. And so maybe every time the Fed speaks, we all got to be a little more careful. Maybe sell off some stocks and just be careful. All right, I'm not ready to talk about DISA yet. Let's talk about some more market stuff. I got a whole bunch of things to show you. Hey, you know, and how do you make any money in this market when everything's so crazy, right? So the S&P's down almost 1%. The Russell's down almost 2%. Russell's small cap. NASDAQ is down less, about a half to 2/3%. This was something that really, I saw something else too. Guys, be careful with your money out there. Dollar euro. So the dollar's getting stronger, euro's getting weaker. It costs you $1.18.77 to buy euro. Was $1.20 earlier. Like week 10, I think it was $1.25, $1.22, $1.23. So you're at $1.18. Look at this decay. Go back a month. Look at this decay. So what this means is that the dollar's strong. Now, why is the dollar strong? Because people believe that the interest rates that you're going to earn holding a dollar are going to be much greater than the interest rates you're going to earn holding a euro. And that delta, if it's 0%, who cares? If it's 1%, it matters. It's a penny, right? If it's 4%, it's 5 cents. Well, the thing's down $1.22 to $1.18. It's down about 3 cents. There must be a 3% interest rate sense of a difference, right? So maybe they believe Europe is going to keep rates down at 0 and keep long rates down at 1 or 2, but the U.S. rates are going to go up. Now, I don't understand this. Let me explain why. Because the other thing I just saw, and I've got a whole chart on the U.S. government treasuries, but let's just take a look at the 10-year. The 10-year is down almost 7 basis points. It's 1.44. Look at this. So Fed does a talk. Rates went up to almost 1.6. I almost feel like something's planned here, right? So then we look at Friday, it dropped to the floor. You're at 1.44. What is going on? So the dollar's strong, yet long rates are down. Long rates are controlled by the market. The market is saying, I'm not afraid. I'm not afraid of inflation. I'm not afraid of you. I'm not afraid, okay? Everything's going to be fine. Stock market, go on up. I'm going to invest like crazy. So we've got a major dichotomy. This is what I mean when I talk about the volatility of the markets. So you're watching, it's Friday. All you really want to do is go out for some drinks tonight. Maybe take your wife or husband out or your girlfriend, boyfriend out. But instead, now you got to worry because rates are falling through the floor. The dollar's strong. Markets are crashing. And you're not sure which way is up. That about sets it. And yet, you want to be the perfect family. So let's talk about the S&P. Remember how I talked about how it was kind of flat? Well, I finally got that regression line to go flat. And it's only flat, though, to June 3rd. So we've had about 2 weeks where the S&P flattened. And what I'm doing here is I'm showing you the S&P with some strength lines. So the relative strength index of the S&P is down just below 50, 46.8. So what that means is it's starting to be a little weaker than stronger. The MACD, there's a cross here, right? And so people are starting to maybe no longer accumulate, but to distribute their S&P 500 shares or spider shares, right? Or, I mean, it's for the index, but you can also do it with the spider. Volume is weak. Maybe it's because we're in the summer months, coming into the summer. And so I just wanted to show you that all the markets are flat. There's a little bit of a dichotomy here at the end, right? So yellow, QQQ, right? So QQQ's gone up. You saw it in the data, but it's not sure I buy it, right? It's just but look at that other drop. So you've got the small caps through the floor. You got the S&P starting to drop. So tech flat to up, small caps dropping, S&P dropping, S&P flat now for 2 weeks. So, and Turkey, God bless them, working hard to stay stable. And then right there from the 11th, took a nosedive. Ooh, that's bad. Now, we run Turkish stocks now. We have a separate model for Turkey. If you call me, I remember I had a guy from Deutsche Bank calling me. We could run Germany. We could probably run any of the European markets. Just let me know. We proved it with Turkey, which was pretty tough, actually. So flat, right? But there's movement now. So now you see this, like, separation, right? Bifurcation. Love that word because we have a simulated bifurcator. Bifurcation between tech, which is holding its own, and small caps, like our pharma companies, and the S&P. Okay. Other thing I'd like to talk to you about, and we are not subscribers to MarketWatch, unfortunately. I'm sorry, MarketWatch. I know you're good. So, let's talk for a minute. Reverse repo program. Overnight market, right? So, let's say you don't have enough money and you're a bank. And at the end of the night, at midnight, you have to have enough money. You can't be short. You have to meet your reserve requirements. And so that was an issue before, right? Where the Fed had to stay open late, had to open the window, called the Fed lending window, right? Where banks were coming in because they didn't have enough cash at the end of the night. Business was good, and they didn't have enough cash to meet the reserve requirements. Now, it's the other way around. Can you imagine that banks had an extra $756 billion overnight in excess of the cash that they have to hold to meet their liabilities? And that number could hit $1 trillion. So you could argue that there's a lot of money on the sidelines, but I'm actually arguing that, just like Jamie Dimon, I actually tweeted on this earlier this week. Jamie Dimon said that right now, JPMC, cash is king. Holding a lot of cash. Holding it on the sidelines because they're going to need it. When interest rates go up and when borrowing goes up, they're going to need that cash to basically make money. Maybe the other banks are doing it as well. So they're not putting it in the market. Markets are flat. Okay? It's interesting. It's interesting. Keep your eyes on the reverse repo program. Just don't call it the RICO program. All right. Let's look at gold. Let's look at silver. So gold dropped. Now, it makes all the sense in the world why gold would drop, right? Wait a minute, Jeff. Does it make all the sense in the world? Yes, it does. So if you believe that inflation is going to rear its ugly head, if you believe, well, gold is supposed to be a hedge against inflation. See, gold holds its value even though money does not. But gold doesn't pay interest. It's a piece of metal, right? It's a thing. Like buttons, right? Buttons don't pay interest. Buttons hold their value, right? It's probably 25 cents worth of buttons. And my guess is 5 years from now, it'll be the equivalent of 25 cents worth of buttons, right? So when the price goes down, it means that maybe people want cash. Maybe they want that interest rate. Maybe they believe that the money they're going to earn on money is more than the purchasing power lost through inflation. That's a little complicated for me, but let's see if it holds on the... This is a pretty big drop, though, right? This is $100. $100 for the price of gold, for an ounce of gold. Take a look at silver. That's $2. It's a $2 drop. That reminds me of Trader Joe, right? $2 Chuck. It's from $28 to $26 in a day or two, right? That's a pretty big deal. And so, my thought for you is this. If you really want to hold physical gold or physical silver, it's cheaper now. It's $100 cheaper for gold. It's $2 cheaper for silver. I think that's great, right? I don't know that I'm buying in on this whole interest versus inflation versus the dollar. And what I worry about, because take a look. Take a look at those indices. You got quadruple witching hour. Okay? Options are expiring. No one wants to pay on those options. So you got the Russell down 1.5%. The Dow down 1.5%. The S&P down 1%. NASDAQ down 0.75%. It could just be a healthy correction, which is great if you're in the market to buy. Or it could be something else. And so there's volatility in the market. Hard to understand. So, what else we got here? I just wanted to point out it wasn't my term. Quadruple witching. And the U.S. stock market is already looking ugly. It's quad witching. And I just wanted to explain what it is. Because most people that I know don't know what witching hour means. Or witching means. Or quadruple witching. Or used to be triple witching. Quadruple witching occurs on the third Friday of the month of every quarter. In March, June, September, and December. So it's now June 18th. It's the third Friday of the month. And it refers to the simultaneous expiration of single stock options, single stock futures, and stock index options and futures. And so, to be honest, I think this has a lot to do with the market movements. And so, I want to talk about an option that I found. Now, I don't buy options because I don't really understand options. I actually bought an option this year and it expired, worthless. So, I mean, that's okay. So, I'm going to show you a chart. Here's a stock, 6 months. I can buy an option that goes 6 months forward at $5. So, if you look, the odds are, you see the line right there, the stock is probably going to end up over $5 because it's largely been over $5. And so there's a November option on this thing at $5, right? In the money, $5, pretty cheap, hold it to November. Now, we know fundamentally that this company will not have its medical phase 3 trial results until middle of 2022. But if you like the play, you might like that option, right? And so what I noticed was the stock actually dropped earlier this week. It was like $4.95, $4.92. It was like $4.80 at one point, $4.75, right? And so at $4.75, that option dropped to the floor. Now, there are $5 and $7.50 options on this stock right now. My guess is there's more money in the puts than there are in the calls. And so people, they wanted to keep it right around $5, but not too far off, to make sure that the options expire worthless. Now, what does it cost you to do that, right? Well, if you see the stock is down 17 cents on 188,000 shares, my guess is it wouldn't take that many shares to move the share price. You could probably do a couple of 1,000 share orders, and you can kind of guide that stock to the price that you need it for market close. And you do that because you have a lot of money on the table on those calls and puts. And so, I don't know. I feel like the forces are a little bit bigger here. There's a lot of volatility in the market. And there's a lot of volatility in calls and put options. So, just a thought for you to be even more careful. Now, I want to show you another data source, right? So, I like to try to educate you guys out there. So, this is my watch list. AMS, American Shared Hospital Medical Services, Hospital Services, down to 280. Thank goodness I sold it at 332. What was that, last week? It's nice. Good earnings. But so, I've got all the stocks I like to follow. So I like SMLP. I will always like SMLP. It always have a place in my heart. It's a great stock. NGL. I sold that above where it is now, right? That's a tough midstream. That's a midstream with a lot of wood to chop. Then you see the medical. So what happens is you make your watch list. You hit watch list, and then anyone can post. So pick me a winner. Look at that. 40.9 thousand likes of his posts. It's got a picture of a woman pretending to talk on the phone with money. Can I get my $7,000 back? Strong on the charts. But there's so many ridiculous memes. Break through the wall. Love that. My God, that reminds me of something. Let me show it to you at the end there. Destroy that wall. Guys laughing. Look at that. Wrestling memes. This is crazy. So, not always the most intelligent responses and stock twits, but every once in a while, there are some intelligent comments and intelligent discussions. And so, discussions about options expirations and what's going on, right? Talk of liquidity, talk of the book, right? Variance is down, expected return is up. So there are good comments out there as well. and you get to meet people as well. So, yeah, so here's the thing with Satsuma, Senior Director of Clinical Operations. Could be in Research Triangle Park in North Carolina or southern San Francisco. And so this is helpful, right? So these are all different posts that are what I call high-quality posts, right? If the medicine, DHE, works, it'll make so many people's lives better. So, something to check. And the way it works is if you're after hours, it'll update the prices after hours, unlike Yahoo Finance, which just shows the prices at closing. And then underneath, if you have the mobile app, it shows you the pre and post changes. And so, it's interesting. So, these are the stocks I follow, and this is some of how I keep up. So where are we in the movie? What else do I have to tell you about the markets? So here's the one-day performance. Why don't we take a look at the week? So over the week, it's pretty mixed, right? So healthcare, of course, biotech is not doing well. Of course, that's what we're long in. Thank you for the great timing. But I guess it's better to buy low than it is to buy high. But diagnostics are up, medical devices are up. So you see tech is almost uniformly green, even after a bad day today. Communication services is up, consumer cyclicals are up, auto manufacturers are up. But the real dark days here are energy, domestic energy is down, U.S. energy. Basic materials are down, the whole industrial sector is down. Real estate investment trusts, with the exception of the services on real estate, is down. There's a lot of down here. Diversified banks are down. Regional banks are down. Insurance is down. So, a little bit of a tough week. Let's see what else we got. Let's take a look at the world for the week. Well, Italy's down. South Africa's down. Australia's pretty weak, exception of Team. Atlassian. Oh, that's cool. That's a cute little company. I like that company. Japan's, for the most part, down, with the exception of Toyota Motors. You saw automotive was up in the U.S., so it makes sense Toyota would be up, but nothing else in Japan. China's a mixed bag. Always interesting. Their oil company is up. Their electric car company is up, but it's just... It could just be timing, right? Mexico is all red. Brazil's pretty much all red. Colombia's red. Bermuda's red. Canada, with the exception of Shopify and Lululemon, is pretty much all red. So, I don't know. It's a mixed market. Depends where you're sitting, I guess. What you're holding. This was interesting. So, SMLP. What is a double top? Right? So you can see how it's riding up the moving averages. I bet you there's a 10 or a 20, a 50, and a 200. So for the most part, it's above its moving averages. But the fact that it popped up and it topped up at around 29. Now this was because of the preferred conversion offering. Here, I'm not sure why it topped, but it did. So we sold right around in this point right here. That's what we sold, right around $25.93. Then it came up and it came back down. And so I'm not sure. I'm not sure if this is some kind of a test. It's just hard to know. Hard to know what we're looking at with SMLP. I love SMLP. I think it's a great company. I think they're doing all the right things to come back. So now I want to look at bonds. There's some stories I wanted to tell on bonds, but let's just start with the big picture. By the way, how are we doing on time? Looks like it's about an hour. So I'm going to try to move a little faster here. So we look at bonds. You look at the 10-year, and you see it was tilting back. It says 1.52. That was yesterday. We know that that's coming down to like 1.45, 1.46. And so, but you look at the 5-year. So those have come up. But the 3 year's flat, the 2 year's flat, the 1 year's flat for months now. Government bonds, for the most part, are it's not updating. Treasury yield curve. Nice and steep. We like to see it steep because that's good for the economy. It indicates that it costs a little more to have long-term money. So there are people looking to actually invest long-term money and not just have it, the other way around. So it's like free, right? People are investing. I still think this 10-year bonds being up, there's a real question on what's going to happen there. And, yeah, there it is. I mean, the good news is we're not coming back up to the highs we saw a while ago, right? 3%. We're still down in that 1.5% range. Take that out. Drop, drop, drop. All right. We're not going to talk about bonds. We're going to talk about DISA and the market opportunity that we see. So we did a program called DISA 101, and we did that after we met with the 763rd Enterprise Support Squadron, the procurement team that helps with small businesses. And so what happens is, if we go into business to support the federal government, we have to have headcount. We have to have full-time employees. You have to know exactly what your capability is. And so if we're focused on a capability of quantum computing, big data analytics, U.S. citizens and no foreign nationals, located in Illinois, maybe located in a hub zone because they're located close to us. If we can find the right talent, it might be beneficial. It's all interesting. So this is a real business opportunity. We are evaluating it. It would require fundraising and it would require hiring and all those things. Versus doing what we're doing now, which is a little more ad hoc. So we are looking at this. If you are experienced, if you've run a small contractor, if you are a small contractor and you want to maybe get together, you can give us a call. If you're looking to be hired to do the type of analytics we do, that's amazing. Give us a shout. So, more progress on our solvers. And while I'm talking to you, I'm going to take a look and see my bespoke simulated annealer did great. Actually did terrific. Genetic algorithm did great. And now I'm running a reverse simulated annealer. How crazy is that? For anyone who knows me, the fact that I coded a reverse simulated annealer, I mean, I didn't even know what that was a year ago, right? So what we've done here is we used to, because the quantum computers aren't big enough, we had to kind of taper or draw down our stocks to just picking a few and then drive those few to the best portfolio or those few to the quantum computer. And so over the past couple weeks, we've been able to run one set of code that goes from large to small. Now, I did a 19-mile bike ride yesterday, and I was thinking through how could we still use the quantum computer with 3,600 stocks? And I think I found something, which is great. So I want you to imagine, so we do measure the Chicago Quantum Net score on every share, every stock. We could take the best X number of shares, right? The D-Wave will always take 119. Fully connected click. So we can do 119. I can do 140, right? Which is not fully connected. And I can feed those. I can take the best individually classed Chicago Quantum Net Score stocks, feed them to the quantum computer, see what I get back. It basically requires building a whole nother model within the system, but in a much smaller scale, and then feed that to the quantum computer and see what we get back. It's fine. It probably will work. And so now we could run consistently a quantum computing solver every single time without the kind of manual stuff that we have to do now. I think that's great. So I'm pretty excited about this, right? And this should speed up our runs. And this actually may get us better quality runs as well. I want to talk a little bit about how this is different, maybe than some of our competitors. So I don't really know the code of the competitors, so let me just tell you how it's really awesome for what we're doing. So if I run a genetic algorithm starts with something okay, and it improves. Now, from a COVID perspective, imagine COVID comes out, infects some people, and then it evolves over time. Gets a little better, able to kill slower or spread faster, more lethal, whatever's good for the virus, right? Well, with stocks, I take a pretty okay portfolio and I make it a little better to time. Now, I do have a solver that doesn't work anymore. It doesn't improve fast enough, right? So then there's other things. What about a bifurcator? Well, that one picks a whole different kind of an answer. A particle swarm optimization, totally different kind of an answer. Steepest gradient descent, forget about it. The stocks, it's like a whole different thing, right? So each of these solvers is looking at the stock market with a different lens. Measured, managed, checked against the same data, giving you the best answer it can find, but they're all independent. So now I might get a portfolio with a certain answer that's completely different than what the other solvers are looking at. It's like I'm looking in a whole different part of the valley. There's a mountain range. I'm looking for the deepest valley. I'm finding my best answers in the northeast quadrant, southwest. Wow, there was one great stock portfolio to look at. And that's what this is about. It's about finding efficient ways to look all around the mountain range for that deepest optimization point. And we're doing it, and we're doing better. In fact, I'd love to find some more optimizers and recruit them on the team. Horses drawing the wagon here. It's great. So I spent a lot of time talking about the Federal Open Market Committee meeting. Let's talk about how the model's been doing picking stocks. So I haven't done the detailed work, but I want to show you it's good enough. I'll show you what I got here. So this is a top 20 pick. This is a top 10 pick. These are real picks. I've never published the top 20. I did publish the top 10. So if you're doing screen prints, it doesn't matter. This is June 2nd. It's good enough. These are all good picks, but they're a little dated right now. We're running a brand new model right now. So CEI doesn't count. CEI was actually picked April 30th against just NYSE Amex. That thing actually popped up above its target. We would have sold it for a profit, which is nice. But let's take a look. So when the S&P is down, dropping 1%, the Chicago Quantum Net Store picks fell through the floor because these are high beta stocks. And so we're down a point. No, we're down 2 points. 2.5 to 3 points. No, Jeffrey, we're down almost 4 points. Half a point. 4.5 points. 4 points. So when the S&P gets a cold, the Chicago Quantum Net Score top 10, right, they get pneumonia. So when the market goes up, these are great. These are the greatest longs you ever saw. Because the market goes up a point, stocks go up 2, 3, 4 points. But I thought this was important to share with you that in a downward market, the long picks, right, that it's tough. Now, this is back in May, and it still has the effect. This is what's interesting. We talk about the model the effect lasting for 25 trading days or 5 weeks. That's May 19th. We're 4 weeks. We're 20 trading days. And this is universally outperforming the S&P. Unfortunately, it's outperforming in the wrong direction. Now we look at top 20. And this was measured against QQQ. You see the same thing. See a lot of red. Domo's green, interesting. Nvidia's green. The model loves Nvidia. Nvidia came through in the clutch there. And pins up. But generally of the top 20, the 20 are down. So QQQ is down 1/3%. Mara and Ride are down 10 times as much, right? 3.8, 4.4. Some of them are around the same, but it's a leverage model. So imagine you're getting a leveraged set of stocks against an index move, but there's no leverage. You're just buying the common. That's nice. That's a lesson learned there. So if you made it this far in the video, you understand now something that's very important. We set a goal to earn a certain level of profits in the market this year, and we pay estimated income taxes on our earnings. So I want to explain what that does, right? So if you buy a stock and you hold it forever, you never pay tax on it. And we have some holdings that we've been holding for 20 years. And to be honest, they're up a lot, right? It's 20 years. But when you're buying and selling stuff throughout a year, throughout a month, throughout a week, so we sell stocks. Last week we made like $12,000. Well, we have to set aside $4,000 for taxes. So don't think that you could take that whole 12 grand and roll it into the next buy. You roll 4,000 right out and you give it to the federal government. Oh, and then give like $800 to the state of Illinois. And then the rest can flow back in the market. So if you're a trader, you got to really think about this. You got to pay your estimated income taxes, or at least hold them aside, because you got to pay them quarterly. It's very important. So the other thing I talked about last week was oil and gas, exploration and production. But midstream is correcting now as well. So I'm worried about energy cooling off. Okay, what we talked about last week. We've started the process of becoming certified investment advisors with the state of Illinois. And that allows us to serve more than 5 clients, paid clients, to do financial planning services. That's great. But we're also going to start looking at the Securities and Exchange Commission FINRA certifications. No progress this week, but it's on our radar. This is the other option. If you're either going to serve DISA, you're going to serve the Department of Defense, you're going to work with the federal government, or you're going to focus in much more on the investment management side. I don't think we can do both. This is the tension in our company right now. I talked about the options I liked. Bonds we're going to talk about next week. Point is, if you like a company and you like their stock and you think it's going to pop up a lot, take a look at the bonds. Because sometimes bonds can pop up a lot faster than stocks and with a lot more money. If you take a look at SMLP, right, the whole company is worth, I'm going to say $200 million. The common stock is $200 million. The common stock plus preferred, $350 million. But they owe $1.1 billion in debt. Just debt that's maturing in the next 12 months. So, you know, that debt is going to move probably a lot more than the common initially until they get closer to par, right? So SMLP did go from low teens to almost par. Geo we looked at, not quite popped all the way. And GL we've looked at, right, the bonds have been coming down. So if you like a stock, take a look at the bonds. It might be a way that you can diversify your bet, but still be very bullish on a company. So, and that's it. I wish you good luck in the markets, and I hope you enjoyed the video. Thank you very much. Again, this is Jeffrey Cohen, Chicago Quantum, and check out our website at www.chicagoquantum.com. Here's the email address if you want to reach out. Here's the website. Here's our office phone number. Yes, you can actually just call us. 847-780-4401. Just call. We have a Better Business Bureau A+ rating, and we work hard to keep. And we would be glad to help you make money in the stock market or solve complex, either logistical or technical problems using quantum algorithms, quantum computers, or just damn smart data analytics. You take care now, folks. Good luck out there, and please be safe in the markets. Bye-bye now.